Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is September 26, 2025, and we're taking a deep dive into one of the market's biggest names, Alphabet, ticker Google. The news surrounding Google has been monumental lately, creating a fascinating mix of bullish catalysts and bearish risks. On the bullish side, the narrative is almost entirely dominated by artificial intelligence. Google's Gemini AI model has seen massive success, even hitting the #1 spot in the Apple App Store, signaling strong consumer adoption. This AI momentum is translating into major business deals, with reports that Meta is in talks to use Gemini for its digital advertising services. Furthermore, Google is aggressively expanding its AI infrastructure, striking a 10-year AI hosting deal with Cipher Mining and supporting TeraWulf's data center expansion. This wave of positive news propelled Google into the exclusive $3 trillion market cap club on September 15th, a landmark achievement reflecting incredible investor confidence. However, there are significant headwinds to consider. Regulators in the EU are reportedly preparing to hit Google with a second major fine under the Digital Markets Act. Back in the US, while the company avoided a forced breakup in one antitrust case, a second major case concerning its digital ad business is still ongoing. These legal and regulatory battles represent a persistent and unpredictable risk for investors. Now, let's see how this complex news environment is reflected in the price action on the charts. Here on the daily chart, we can see the incredible journey Google has been on throughout 2025. The stock established a major bottom around the $140 level back in April and has been in a powerful uptrend ever since. The momentum really began to accelerate in late August, breaking out of a consolidation period around the $210 mark. Notice this massive gap up on September 3rd, where the price jumped from a close of $211 to open above $226. This gap area, between $212 and $226, now represents a huge zone of potential support should the price ever retrace that far. The rally culminated in a spectacular spike on September 15th, which directly aligns with the news of it crossing the $3 trillion market cap. That move pushed the stock to an all-time high of $256 just a few days later on September 19th. Since hitting that peak, we've seen a bit of a pullback, which is perfectly normal after such a parabolic run. The price has found some footing over the last few days in the $245 to $247 range, after dipping as low as $240 yesterday. The key resistance level to watch is, of course, the all-time high at $256. On the support side, the first minor level is this current zone around $245. A more significant support level sits near the psychological $240 mark, which was briefly tested yesterday. If that level were to break, the next area of interest would be around $230, which coincides with the price action just before the final leg of the rally. Let's switch over to the 1-hour chart to get a clearer picture of this recent pullback. Here we can see the sharp decline from the $256 peak over the course of September 22nd and 23rd. The selling pressure intensified on the 24th, pushing the price down below $250 and eventually finding a bottom just above $240 yesterday on the 25th. Interestingly, yesterday's bounce off the lows correlates with the timing of the positive news about the Cipher Mining AI deal and the ongoing talks with Meta. This suggests that despite the profit-taking, buyers are still very interested in accumulating shares on dips, especially when reinforced by positive fundamental news. The price action has been choppy since that bounce, essentially consolidating in a range between roughly $244 and $247. This indicates a period of indecision in the short term as traders digest the recent news and the massive price run. A break above this consolidation range, particularly above $248, would be a bullish short-term signal. Conversely, a break below $244 could signal another test of the crucial $240 support level. Now, for an even closer look, let's drill down to the 15-minute chart for the last 2 trading days. Here you can see the waterfall decline on September 24th, followed by the struggle to find a bottom. Yesterday, September 25th, opened weak, hitting that low of $240.74 in the first few hours of trading. But from there, buyers stepped in aggressively, pushing the price back up throughout the day. We can see a pattern of higher lows forming throughout the afternoon session yesterday, culminating in a close near the day's highs. This intraday reversal is a constructive sign for the bulls, showing resilience at a key support level. Today's pre-market and early action will be critical to see if this bullish momentum can be sustained. So, to recap everything and look ahead, let's return to the daily chart. The long-term trend is undeniably bullish, supported by a powerful AI narrative. However, the short-term picture is one of consolidation after hitting a new all-time high. Let's summarize the key price levels we've discussed. Major resistance is at the all-time high of $256. A smaller resistance area sits around $252, the high from September 18th. Immediate support is in the $244 to $245 zone. The most critical short-term support level is at $240. Below that, we look to support around $230, and then the major gap fill zone down to $226. Now for some potential scenarios, keeping in mind these are not financial advice. A bullish scenario, which I see as quite likely, around 70% probability, involves the stock holding above the $245 support level and breaking out of its current consolidation. If it can decisively move above $250, a retest of the $256 all-time high seems imminent. This would be reinforced by more positive news on the AI front or a broader market rally. A bearish scenario would see the price fail to hold the $245 support and break below $240 with conviction. This could open the door for a deeper correction towards the $230 level. I'd place the probability of this around 30%, and it would likely be triggered by a negative resolution to the EU fine or a significant downturn in the general market. A neutral, range-bound scenario between $240 and $252 is also a strong possibility as the stock builds a base before its next major move. Things to watch for in the coming days are any official announcements from the EU regarding fines, further details on the Meta partnership, and, of course, the broader market's reaction to inflation data and Fed commentary. The stock's reaction at these key price levels will give us the best clue for its next direction. That's our in-depth look at Google for today. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and ring the bell so you don't miss our next video. Trade safe, and we'll see you next time.